Hi, this is Peter Schiff again, and this is Friday, March 6th, 2009, and I'm recording this video blog just after the Dow has closed a very volatile session. I think we were down well over 100 at one point. The Dow got below 6,500. It ended up closing up about 30 points back above the 6,600 level, but a huge down week. I think it's 4 consecutive down weeks in a row. Look at the other indexes getting clobbered, like the transports, the utilities. You know, in terms of gold, the Dow was actually worth fewer than 7 ounces of gold at its low point today. That's a new low for the move. And in fact, I had forecast last year that the Dow would hit 7 ounces of gold this year. I just didn't think it would do it by March. So I think my forecast for next year was that the Dow would hit 5 ounces of gold, and you know, it looks like it might even make that in 2009. We'll have to see. Again, you know, I wouldn't be surprised if there was a rally from here. You know, it could happen at any time, and I'm sure if there is a rally, again, the people are going to be coming out and talking about the bottom is in, the bottom is in, you got to buy. Remember, these are the same people who have been saying that all the way down. You know, capitulation, capitulation. People were talking about capitulation when the Dow was still above 10,000, you know, and they're still capitulating, and it's down in the 6,000s. So tune all that stuff out. Regardless, I don't care if the Dow rallies back above 8,000. This bear market is not over. It's going to keep going lower. But more importantly than the nominal price is the real price. And the real price is going to keep falling. As I just mentioned, in terms of gold, the market is now down well over 80% from its peak 9 years ago. Also, you know, another thing in the news I wanted to mention was the FDIC, of course, running out of money, and now the government is talking about an extra $500 billion line of credit for the FDIC. Well, the reason the FDIC is running out of money because the trust fund that it has is being depleted by all the banks that are failing. But again, government trust funds are sham anyway, because all that's in that trust fund is government IOUs anyway. But when they run out, now they need to get additional borrowing from the government, which of course they're going to need. And everybody, of course, believes that their accounts are insured because the FDIC stands behind all the bank accounts. But the bottom line is, where's the FDIC ultimately going to get the money if a lot of these big banks fail? It's going to get the money from the government. Well, where's the government going to get the money? They're going to print it. You know, they might try to borrow it from the Chinese or borrow it from the Japanese, but in the final analysis, they're going to have to print all the money, which means nobody's account is safe. It doesn't matter if you get your money back if you can't buy anything with it, and that would be what would happen. If we did have a run of bank failures, the fact that the FDIC insurance was there would be meaningless. Sure, you get your money back, but have fun buying anything with it. That's the reality. The reality is nobody's money is safe if it's in U.S. dollars, even if it's under your mattress. I don't care if you take it out of the bank. Anywhere you put it, if it's U.S. dollars, it's not safe. Now let's look about the economic news that came out today. You know, we had the jobs numbers, or the lack of job numbers that came out. Again, worse than expected. I don't know when the statisticians are going to start figuring out how bad this thing is, because every time we get an economic statistic, it's always worse than they expect. But anyway, we have, I think, 3 months in a row where we've lost better than 600,000 jobs. I think the only sector that added jobs was the government, and that hurts us because those are non-productive jobs. Everybody, we all have to work harder to support those government jobs. They're not doing us any good. And they revised down the last few months. The unemployment rate officially now is, I think, 8.1%. But of course, the official numbers are nonsense. They don't count all the people that are given up, that aren't even looking for work. They don't count all the people that are working part-time at McDonald's because they can't get a real job. I mean, they don't count all the independent contractors who are earning nothing but who still are employed. You know, they're commissioned salesmen. They're getting no money, but they're not counted as being unemployed. If you had a real tally on unemployment, my guess is it's probably closer to 15% than 8%. But the interesting thing that happened is we got this abysmal economic news, and initially the dollar did what it normally does. The dollar sold off. The dollar index was down 120. The currencies were all way up. As soon as the stock market opened and the little rally that we had faded, the dollar immediately rallied. You know, it ended up negative on the day, but still the dollar caught a bid by the fact that the Dow was selling off, by U.S. stocks going down. So in other words, bad economic news is good for the dollar, right? Because bad economic news makes people sell stocks. People selling stocks make people buy dollars as a safe haven, which is ridiculous as a safe haven. Why are people seeking safety in a country where the economic fundamentals are deteriorating as fast as they are here? It shows that this whole dollar rally is nonsense. It's all living on borrowed time. And if we think things are bad now, if we think the stock market is bad now, imagine how worse it's going to be when the dollar actually goes down on bad news. When the bond market starts to go down on bad news, because the bad news weakens the dollar and causes people to fear inflation and fear dollar assets. That's when this decline is going to turn into a rout. I mean, we're not really, getting, we're not getting 1,000-point down days here in the Dow. It's Chinese water torture. But one of these days, this is going to turn into something much more substantial on the downside when the currency crisis begins, because it's forming. I mean, I know the dollar hasn't made a new high. It came close yesterday, and the dollar was still positive. The dollar had a good week this week, despite the decline in the stock market and despite all this bad data. Plus, we also, as we mentioned yesterday, we had rate cuts from the ECB and from the Bank of England, so that also worked to support the dollar. But ultimately, all this horrific economic data is going to undermine the dollar. And believe me, it's going to get worse. We're now in the third term of the Bush administration. And if you thought the last two terms were bad, wait till you see this one. Because again, I think this Bush term, which of course is led by Obama, but I think the Obama-Bernanke combination is going to end up being far more destructive than the Bush-Greenspan combination. And we saw how much damage the former did. So what we're about to experience now, I think, is going to be horrific. And it's barely begun. Anyway, I think that's it for today. Everybody have a good weekend, and I'll try to be back again on Monday with another issue of the Schiff Report. Thanks again, everybody, for tuning in.